Hi and Assalamualaikum warahmatullahi wabarakatuh to my respected and lovely lecturer, Madam Nadia Ferlina, and to all my friends. I am Nurul Nazira binti Zaha. Today, I would like to present the comparison between Islamic finance and conventional finance. First is introduction. What do you understand by Islamic finance? Islamic finance or Islamic banking is a financing activity that comply with Sharia compliant. The revenue sources is mainly from the profit sharing. On the other hand, the conventional finance is a modern financing which is based on capitalist system. The prime source of revenue of conventional bank is interest charged on the money lending to the individuals and corporation. First is value proposition. It means a promise of value to be delivered, communicated, and acknowledged. The value proposition brought by Islamic finance is maslahah to both parties, which promote justice and fairness. For example, through the sharing practice that can be seen through a loan application made by a customer. In conventional banking, when bank give out a loan, the borrower bears all risk. If the customer, the borrower, incurred loss in his business, the conventional bank would not be affected as the borrower still need to pay the interest rate to the bank. However, in an Islamic bank, both bank and entrepreneur shares the reward and failure. For example, under a musyawarah contract where the customer and bank will become a partnership, both parties provide capital to finance a project. Therefore, the profit and loss will be borne by the partnership member. Charging interest as practiced by the conventional financial system is unjust to both lenders and borrowers. We can see that the values of profit and loss sharing offered by Islamic bank can complement conventional bank and thereby help to diversify systematic risk. Second is Sharia compliant, which emphasizes on the payment of zakat. Zakat can be seen as one of the value proposition brought by the Islamic bank. It does not only help people, but the customer will have a confidence to invest or to deposit their money with bank who pays zakat, as we all know that zakat is for the purification of wealth. The Islamic bank pays zakat annually in a portion of 2.5% of their income. Due to the wealth people must pay zakat to the poor, the wealth will not become too rich, whereas the poor will not become poorer. However, the conventional bank practice the charity concept in helping the poor. What differs zakat and charity is, zakat is compulsory and charity is given voluntarily. Since charity is based on the volunteer of others, the help or contribution to the poor stop when the charity is no longer given. This is different from the concept of zakat as it is compulsory payment made by the Muslim and Islamic banking, and it will impact more on society since it can ensure the continuous contribution to the poor. The obligation of paying zakat practiced by Islamic banks somewhat can complement the conventional bank in terms of its impact on the society. Modus operandi, which can be defined as a particular way or method of doing something. It includes how activities such as task allocation, coordination, and supervision are directed toward the achievement of organizational aim. In Islamic bank structure, we know that Sharia Supervisory Board directly influence the product and services offered by Islamic bank. The halal, the haram issue are all considered as a factor of Islamic banking growth. But for the conventional banking system structure, we can analyze that the product and services offered by them does not influence by the Sharia Supervisory Board decision. How to distinguish the modus operandi between the Islamic bank and conventional bank? Let's see in terms of process of deposit and loans or capital. For the Islamic banking modus operandi, first, customer will deposit money in Islamic bank. Second, the money is used by the bank to be invested in projects that allowed by Sharia Supervisory Board. Third, the outcome of the profit from the project will be shared between the bank and deposited in a pre-agreed ratio. Lastly, in terms of loss under musyawarah contract, loss will be borne by customers and bank. Perhaps in mudarabah, the loss will be borne by only the depositor. Why? The principle stated that only capital provider will bear the losses. In musyawarah contract, both provide capital. However, in mudarabah contract, only depositor provide capital and bank will only act as entrepreneur. This gives benefit to both parties, which is the bank and also the customers. Conventional banking modus operandi. First, capital is from shareholder, where they offer capital to customer needed, and conventional bank will act as financial intermediaries. Secondly, customer will request and apply loan with a conventional bank. Third, the conventional bank will lend a customer a sum amount of loan. The fund generated by the conventional banking is mainly from the surplus unit, which can be from interbank lending market, from the shareholder, and also from the deposit money made by customer. Fourth step, a customer will obligate to pay the money lent by bank plus with the interest rate charge. Normally, in practice, it is paid in a monthly basis. The last step is conventional bank will distribute the money gained from the interest rate charge on loan made by customer to all the capital providers. What differ the modus operandi between Islamic finance and conventional finance is in terms of losses, where Islamic bank practice profit and loss sharing, whereas the conventional banking practice profit which only distributed to surplus unit, and customer need to bear all the losses incurred in his business. Operating mechanisms are the means of control over the pace and direction of an initiative. The mechanism of funds consists deposit and financing and investment. Let's see the difference between these two. In terms of deposit, the difference lies in terms of reward. Conventional bank reward customer with fixed rate of interest and in predetermined date. However, Islamic banking reward on the deposit money by customer through musyarakah and mudarabah contract, where the reward is variable and not fixed, unlike conventional banking. Second phases is in terms of financing and investment. In this case, the difference lies in financing agreement. Conventional banks are offering credit facility for a fixed reward, while Islamic banking practice profit and risk sharing. It is because Islamic finance do not allow to charge interest on loan made by customers. Last instrument offered, which also known as product contract offer, available for Islamic banking and conventional banking. They have a lot in common, but those instruments had a different characteristic and way to be implemented. For conventional banking on current account, there is no specific underlying mode is used in current account, but for Islamic banking, they use al-wadi'ah ladabanah based on COD contract, where the bank is liable to pay depositors money back on demand. For conventional bank, current account, the bank will use this fund for investment and other purpose regardless the Sharia prohibition. But Islamic banking will use this fund for investment and other purpose. It allows satisfaction of having the money safely deposited with a bank. Second is in terms of saving account for conventional banking, which is mudarabah for Islamic banking. Conventional banking, there is no underlying mode. Specific underlying mode is used in saving account, but Islamic banking use mudarabah, where it is an investment for profit. Account governed under the rules of mudarabah. The conventional banking saving account, the relationship is debtor and creditor relationship, but Islamic banking mudarabah is mudarib, robul ma'al, or partners. In terms of leasing of conventional banking and ijarah in Islamic banking. Leasing in conventional banking, the lease commences the very day on the which the price is paid by the bank, whether the customer has taken the delivery or not. But ijarah in Islamic banking, rental start after the delivery of asset, not from the day the price has been paid by bank. And the leasing expenses incurred in the process of purchase of asset are paid by the customer, which is practiced under conventional bank. But for Islamic bank is the owner of the asset, therefore it is liable to pay all expenses incurred in the process of its purchase. Lastly, we will take a look on the lending or financing under conventional banking and musyarakah under Islamic banking. Lending or financing in conventional bank are in the business of lending and borrowing money based on interest. But for the musyarakah Islamic bank, it is not money lending institute, but they work as a trading or investment house. In conventional bank, all types of industry are financed. Only business deemed illegal by the law of the land are not supported. But for the musyarakah Islamic banking, bank do not permit financing industry that cause harm to the society, such as alcohol, tobacco, etc. In a conclusion, we can sum up that both Islamic finance and conventional finance can be differed through such ways such as value proposition, its modus operandi, the operational mechanism, and the characteristic of the product and services offered. Even though they mainly offer many things in common, but the way on how the transaction is implemented is totally different, which we can see that Islamic bank is based on Sharia compliant and conventional bank are not under the Sharia compliant. To be concluded, we can say that Islamic finance is more preferred.